Hey guys, welcome back. In this video, we are talking about the AMC earnings, the upgraded price target, the short squeeze catalyst, and many more in this video. Firstly, we had AMC earnings, and it was extremely good, just like we were expecting. Some of the things to be looking out for is, of course, in comparison to the first quarter of 2021, our revenue this year was 1,045 million compared to the 862.5. Net loss was 117.1 million compared to the 202.1 million last year. Adjusted EBITDA was 38.3 million compared to negative 57.7 million. And what we have in the net cash using operating activities was 128.5 million compared to 317 million. So these are all very important things to be looking at because it talks about the position that AMC is at. It talks about going into the future, what we can be expecting, and especially of understanding how AMC is using the cash, because that is something that people were obviously focusing on. Now, we are looking at this already, is that because of the earnings, we are seeing how upgrading AMC from hold to buy with a 250 price target. Right now, AMC is currently trading around 168 to 170 in pre-market. Now, we are expecting this because at the end of the day, it is good earnings for AMC. We were expecting good earnings and we got good earnings. And what it also means is that going into the future, you're going to be seeing how AMC's earnings are only going to improve on top of this. We are seeing Adam Aron talk about things like in terms of announcing our best first quarter result since 2019. In just 3 months, our adjusted EBITDA was up a breathtaking 96 million year over year. And we reaffirmed how optimistic we are about a growing industry-wide box office for the remainder of 2026. And this is what we've said. We've already seen how well the earnings is for Q1 of 2026. Adam Aron is reassuring us that going into the rest of this year, we're only going to be looking at this, but even better, especially with some of the things that they are planning on doing, which we'll talk about that later on in this video. And this is why we're seeing people upgrading AMC as a price target. This is why we're seeing AMC up even in pre-market, why we're seeing people buying into AMC. Now, there are some few things that we do need to watch out for firstly. But going into this, we have to understand, before we talk about what we have to watch out for, more things from Adam Aron, just like I was saying, is that you can see we think it's easy to forecast that the full year number for 2026 could be somewhere between 500 million and 1.2 billion, bigger than that of 2025. So this is why we are seeing people trying to get into AMC now, is why we're seeing the optimism for AMC to be this high. However, and I want to talk about some of the things we're looking out for. Now, it's sad that we even have to think about this, but it is what's happening for AMC. And at times like this, when we're seeing AMC give brilliant fundamental news, it's more of a worry than ever. You can see how some users are already saying, and this was according to yesterday, AMC up 9% today. Is this going to be one of those fake runs that get walked down during the earnings calls, or is this week different? We also have, as soon as this news was posted, AMC up 11%, expect to go absolutely nowhere for earnings or drop if anything. Now, again, it's sad that we even have to think like this. The fact that when we are expecting AMC to drop, despite the fact they are giving out good news. The reason for this is because we have seen this plenty of times in the past happen before. When AMC beats earnings more by a large proportion, yet it's still being walked down in terms of the price. And we did in fact actually see this as AMC was reviewing earnings as they were giving out the earnings during post-market. We were actually seeing AMC down by more than 5%. Now, this is something that we were expecting anyway. So it is to my surprise that we are seeing the AMC price going up. But the reason why it's to my surprise is because the hedge funds aren't doing the usual tactics. But I guess they really can't hide the fact of how well AMC is doing. And it would be dumb to not think that AMC is a good investment when you see how well they're doing, when you see their positive EBITDA. And this is what we have to realize of what's going on with AMC right now. While we have to understand people are giving a buy target on AMC. Something that we still have to watch out for is that at times like this is where shorts are working full force, where they want to suppress AMC as much as possible. So I think it's still important that going into today, we kind of watch out for what the market is doing, what AMC is doing. Don't let the price, and I've always said this, don't let the price affect your opinion on AMC, because the price does not reflect the fundamentals. Even if the price was going down, it doesn't mean the fundamentals are doing bad, because if you took a look at the fundamentals, you will understand exactly how well AMC is doing. If you're going to take a look at it here, AMC had $6 billion debt after COVID. Now AMC has $3.9 billion debt after paying off a significant portion and refinancing for lower rates through 2031. And with how they're operating right now, with their revenue right now, you can obviously expect that to get even lower in terms of the debt. And we're already seeing how interest payment is already going down lower. And so that's a very important thing to be looking out for. Another big thing is one of the biggest reasons for why I think they want to suppress AMC, especially right now, is that the conversions of a blockbuster revenue catalyst and a fortified balance sheet is creating a perfect technical setup for a short squeeze. So this is what we're seeing, and this is why I'm expecting a big suppression, big manipulation on AMC, because AMC has primed themselves in the perfect position to encourage investors to buy more AMC, to encourage any short sellers to stop short selling because the thesis is no longer there. And a lot of the things right now with the sentiment going on and everything, with the options expecting to be brought up even more, it's all really adding up and pointing towards a short squeeze. And this is a catalyst that we are looking out for. And so especially at times like this, when the percentage, the possibility of a short squeeze is getting bigger and bigger, that they want to suppress AMC more and more, because they realize if they're not able to contain AMC, if they're not able to contain the sentiment, the volume, the pressure, then more and more people, more and more capital are just going to flow into AMC. And that's what they are trying to avoid. And so currently we're seeing AMC to be in a very, very good position. If we talk about in kind of what we were expecting for Q2 as well, and why I say that Q1 is important because it allows us to apply it for Q2, is the fact that we're already looking at how the box office is doing well. 2026 already at 2.75 billion and growing, smashing last year by 13.8%. And so we see how well the Q1 box office was, and so we saw how well the Q1 of AMC earnings was. So now that we're seeing Q2 of the box office doing well, we can expect Q2 of AMC to also do well. And the effect that we're having for Q1 is they're going to carry over. And so it's very important to really understand that this Q1, not just for the short-term momentum, but also understanding how AMC is going to operate into the future with this kind of operation structure that they have. Another big thing is that AMC is priced like it's 2021. But we have a box office bigger than anything since 2019 and better fundamentals, revenue per person, rent, and other key metrics. That's deep value. And this is the biggest thing I think people are still not realizing, is that AMC is completely different than in the past because of the things that it's doing right now. And it's one of the biggest reasons for when even the normal retail investors catch on, is really going to incentivize them to start buying into AMC. If you want to look out for some of the things, firstly, Adam has stated on the call, we'll be taking music to a whole new level. Starting this June, AMC theaters will offer live concert experiences across 300 plus AMC theaters nationwide. We're opening a new chapter in music entertainment. So this is something that they want to get into. And we've already seen how well the Taylor Swift has already done, and some of the others have done as well. And AMC is going to do this. Remember, AMC didn't do this in the past before, and this is something that has already proven to be very successful. We talked about the number one merchandise being sold to be AMC, the Taylor Swift, and how that was an AMC film distribution side of the business as well. And so if they're going into this more, we're going to be expecting both more business in perhaps the AMC film distribution, but also just from the merchandise sales, the ticket sales, and of course much more. And this is why I've said this is going to incentivize more people when people catch on about how well AMC is doing. And this is the arena one that we're talking about. And you can see Adam has gone to say more of this, which is open the door of our theaters, not only moviegoers, but also to fans of live concert. Remember, they want to go across the nation. They already have 300 theaters ready for this. I think it's very important that you need to realize about how big this really will be and the potential there is for this. And another big thing, and it's why you have to realize, again, going back to the point of how AMC is very different than the past, is that currently with what's going on right now is that Regal and Cinemark are considering refusing to play Narnia in their theaters. So currently there's a huge kind of drama going on behind the scenes between the theater CEOs. But for AMC, this is actually good news. The reason for this is because what we are seeing right now is the fact that IMAX, Netflix, and AMC are working together, and also the potential backroom deal with AMC and Paramount. So if we are seeing this, it's going to be amazing news for us. If we are able to see an exclusive deal between AMC and Netflix, and of course IMAX included as well, and then we see an exclusive deal between AMC and Paramount, you can understand how that's going to allow AMC to truly grow, and why that will make AMC kind of the most sought after. Because if we're getting exclusive films that's only able to be aired in AMC, and those are films that people will want to watch, you will understand how well that would be. An example to be given, now again, this is just an example, but you can imagine if Avengers was only available at AMC, how powerful that would have been. And we're very likely to perhaps see something of the sort. And a big reason for this as well about why the deal with Netflix is important is because if just 5% of Netflix users go to AMC for big releases, which is 15 million people, and you break it down, you're seeing average ticket of $11.50, which would be 172 million. You're seeing average concessions to be $20 per person, which would then be 300 million. Total equals 472.5 million from one wave of viewers. And this is what we've said with how this perhaps exclusive deal would be very, very key. And so that's why, this is something that we need to look out for. Now, another big thing is that over the past few days, and kind of going back onto this manipulation, and so if you watched up until this far and you're looking at today's chart, remember, in the past few days, especially going up to this earnings, we've been looking at suppression. Firstly, the other day we saw 43 million volume, but AMC closed with a 0% change in price. And that was already what was happening. Again, this is because of the suppression. We also saw how this particular news where AMC saw more than 4.4 million guests at its own theaters, yet we were seeing AMC down 1%. Now, in the past, every time AMC has gone up, they have tried to mix it with the fact that it was because we were looking at people going to theaters. But yet, it doesn't add up all the time. Now, we know that the reason for AMC going up is because shorts weren't able to suppress it, and therefore we saw real price value. But you can see how it's very contradictory, and you can see how they're trying to hide it behind the news. But even so, we're seeing how they're trying to suppress AMC as of recent. So that's something that you do obviously want to watch out for. Another big thing is the AMC issuance, and we've already talked about this, about raising money, and this is how they're able to pay off debt. This is how they're able to grow their operations. And we talked about this already with the increase in shares. It isn't something to be worrying about. We're seeing an additional 144 million shares or 142 million shares, but this is something that we already knew and it was already priced in. So there's nothing to be worried about that if you have been looking at things such as these news, because at the end of the day, remember, it actually cuts 3 to 5 million in cash payment because of this. This is how we have to understand about the importance. People are talking about how AMC is spending cash, yet they're unhappy when AMC is able to cut things that reduces cash spending. So, it really contradicts itself as well, but we have to understand to the truth about what it is. Furthermore, a big reason for this is because of how AMC is fundamentally improving with this. Now, I suggest you go take a look at this. But some of the things we have already talked about and ready to sum it up is, again, the positive spin on AMC's exchangeable notes. Because that's paying off debt, that's put AMC in a good position. Less interest payment, therefore more cash to invest, more cash to put onto other infrastructures. This is very good. A cleaner capital structure, which is going to attract more people, strengthen position. Again, what we have to understand about how AMC is fighting for survivability. And a big thing for this, why I talk about this, is because if they're able to have more cash, they're able to make more investment. One of the investments they've made in the past was, of course, on HYMC. Now, what we saw was around HYMC, and you can see is that they've recently sold 700 Hycroft shares at an average price of 42.4, generating 29.7 million in cash proceeds before brokerage commissions. So now we're seeing that they have realized a total proceeds of 53.8 million to date, compared to the initial 27.9 million. And this is what we're talking about with how if AMC were to have even more cash, they're obviously able to then make even more money. It's a very simple understanding, and it just goes on to say how we need to see AMC really improve the fundamentals, and that's exactly what they're doing. As of right now, they own 129,000, which is around 4.5 to 5 million, depending on the price of Highcroft, depending on when you're watching this. And so that's where we are at. But this is still very good. And with the extra cash, they can either make more investments, or they can pay down the debt, or they can invest into infrastructure. These are all perfect things that we want to see. And this is what we are getting right now from AMC. A stronger foundation built for the long haul. And all the things that we've talked about pretty much is summed up here. Again, feel free to pause the video and take a look at this, but you have to understand of how AMC is really operating right now. And a big thing for this is that this is why we are seeing AMC really having that squeeze catalyst. Hedge funds have been selling multiple floats comprised of uncountable counterfeits of AMC shares. And they've worked with one another, but now it's all coming to the end, especially with what we talked about at the very start, with how everything is adding up to being the squeeze catalyst. Another thing is that from the technicals, we need to see AMC hold over 154. And that's something that we're looking at right now, especially with the fact with the pre-market. Again, you can see the price kind of going down. We started off at 1.68. We're now at 1.66. But this is what we were expecting. But it doesn't change away from the fact, it doesn't take away from the fact that AMC has done extremely well in the earnings. And another thing to look at is the GameStop deal. And again, some people are obviously questioning about this, and I can understand why. But we talked about how if they're able to get this this eBay deal for GameStop, it's going to be extremely good. And we talked about how that is a potential, but also the movement between GME and AMC recently, you can see similarities. At the end of the day, we just want to see our companies make good decisions. And that is what we are waiting for. For the macro, for the hedge funds, we're looking at how funds like Citadel, who are not having the best months. So what we are seeing is hedge funds to not make the best gains. Now, S&P had a 10% gain during April. But yet, if you look at companies like Citadel, what we are actually seeing is a 1.4%. Now, bear in mind, this is off the back of how much they were losing throughout the last few months. And perhaps they're not even making this much as they're claiming, especially with how volatile the market has been. We can really expect them to lose even more money. But this is what we've said with how they're not performing well, especially with what AMC has been doing. And you can see the coincidence, you can see the correlation between AMC going up and firms that are shorting AMC to not have the best performance. And it just talks about how they have not covered, they're still trapped in this play. Some other things to be looking out for is, of course, the reverse repo. Starting Monday, it was at 0.61, and then going to Tuesday, it was 1.12. Again, we are seeing it fluctuating, but at the end of the day, if we're seeing them needing money, if we're seeing it run to zero, it just talks about the illiquidity that's in the market. As always, this is Financial Advice, and I'll catch you guys next time.